Can we hear me now? It's always rough getting started when we don't live stream for a while. I believe it might be fixed. Yes, okay, you can hear me. Let's go. Thanks for putting up with me. That's why we start a little bit early. I've been talking to myself, I guess, but this is an exciting day. CleanSpark reports their earnings. We only get to do this 4 times a year, so it's an exciting day whenever we get to live stream. Right now, I do have it on members only mode. I've kind of learned from the past, if we're not in members only mode, we get a lot of spam, and I like to keep the spam away, but I do keep the live stream chat membership as cheap as possible. It's $3 a month, so less than a cup of coffee. You can join the chat by hitting the join button. It's right next to the subscribe button down below if you want to chat. Chatting is not a requirement, but I will answer questions from the members if there are any. Other than that, let me get I kind of have to restart my whole deal here since you guys couldn't hear my microphone at first. Let's go here and here and here. Okay, now you should be able to see my my browser. So that's good news, right? We're on the PR Newswire website. This is where we should get the earnings release right away. There's no guarantee I'm going to get it right away. I'm usually a little bit late, but we will get it figured out. I do want to cover quickly. I'm going to close out of that. I posted this tweet earlier, and for some reason the X algorithm didn't like it. I can't quite figure it out. You know, usually my CleanSpark tweets get 40, 50,000 views. This only got pushed out to 2,200 people. Kind of confusing, and I'll zoom in so you guys can see this a little better maybe. I put this out. These are my estimates for the quarter. We did some math, some comparisons to the prior quarter, and I expect revenue numbers to come in at $165.6 million. That would be ahead of analyst estimations or expectations of $155 million, so that should be a beat. I think net income will be $260 million with earnings per share of 92 cents, and analysts are expecting negative earnings per share. So that should be a huge beat. There's never any guarantee that the stock is going to move right away on earnings, especially with Bitcoin mining companies, because we generally know what's happening going into the earnings report. You know, they release monthly operational updates. They tell us how many Bitcoin they mined. We generally know what the price of Bitcoin is at. So we generally kind of have a good idea what revenue and profits will be. You kind of need additional pieces of news to really move the stock much. But I do think this could be somewhat of a surprise. I don't know if Wall Street or investors have caught on to the new FASB accounting rules where you get to count your gain on fair value of Bitcoin, so your HODL balance towards your net income at the company. That could be somewhat of a surprise to the markets. We'll see. But I break this down, and my cash cost per Bitcoin mined during the quarter, I think, will end up at $50,500 essentially. If you want to add depreciation and stock-based compensation to it, the all-in cost per Bitcoin, I think, is going to come in at $84,433. So that kind of gives you some background there. I do post these spreadsheets and whatnot and preview videos to the members in the Discord server if you're curious or want to join that. But there's my estimations. We should have the earnings report out. I'll keep looking. Sometimes they release it right at 3 o'clock or right at market close. Sometimes they're a few minutes late. And I guess we could just pull up the CleanSpark Investor Relations page, because theoretically it should be posted there right away as well. Let's see, view all news. And let me know if you guys have it and I'm just missing it. Doesn't look like it's been posted on their website yet. I can look at X. Sometimes X gives the most up-to-date information because of all those automated bots that just scan the news wires for earnings releases. I'm not seeing anything, so we're just going to wait patiently for this to happen. I think, again, just to review, it's going to be a very positive quarter for the company just because of what the price of Bitcoin did during the quarter. The average price of Bitcoin was up like 36.7% in this quarter from the prior quarter. Based on that alone, the mining economics got way better, improved a lot for the company. And their HODL value, obviously we just covered that, increased quite a bit as a result of the price of Bitcoin going higher. If you guys are new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button. I love seeing all the new faces pop into the channel. But I'm going to keep refreshing and looking for this earnings release. I'm guessing maybe we'll get it just in a couple of minutes. I think last time it came out right at 3:03 or 3:04 or 3:05. You know, 3 to 5 minutes after market close, but we'll keep our eyes out here. Still not seeing anything on the company's IR page. So we'll just keep waiting patiently, I guess. Let's see. I haven't really even been paying attention to the markets too much. Looks like the Nasdaq was up 0.5%, down 30 basis points after hours. Let's see how the Russell 2000 did. Russell 2000's down again. CleanSpark itself was up 1% today. We'll take that because Bitcoin was down by quite a bit. So we had positive return on CleanSpark stock today, and we probably shouldn't have had positive return just based on what the price of Bitcoin is doing, which now is down to what are we at? $96,000. And it looks like we can cover this briefly if CleanSpark's numbers still aren't out yet. It looks like we got Amazon's numbers. So I can pull those numbers up if we go, let's see. Let me just search on X, AMZN, Amazon, and we'll see what their numbers were. Here we go. Evan, great guy, by the way. So, follow him if you don't on X. Amazon EPS of $1.86, beating expectations of $1.48. Complete blowout. Revenue of $188 billion, beating expectations of $187 billion. Let's see how Amazon is acting after hours, because that will be telling for the markets tomorrow. Down 2.27%, but we have kind of seen the big tech earnings. They'll trade down right away, and then they'll kind of bounce back when the earnings call starts. I think more than likely the markets are going to be looking for their comments on AI, CapEx, and whatnot. It remains to be seen. I don't have any other headlines at this point. The big beat on EPS is encouraging for Amazon, of course. The problem with all of this AI spend is there really isn't really an ROI on it right now. They're spending billions and billions and billions of dollars for basically for nothing right now, in the hopes that it's going to be game changing for their companies in a few years. That's a risk. And obviously, you don't want to overspend on something if it's too risky. I could go on and on about AI. I know we're mostly talking about CleanSpark here today. I still don't have CleanSpark numbers, though. So I'm going to keep an eye out. It's 3:05, so I would guess they're probably coming out now. Somebody, let's see. I'll refresh the page there. I'll refresh the PR Newswire. Still nothing. I wonder if I search CleanSpark. Fiscal year first. Yeah, this is what we want right here. Perfect. Hey, we got it pulled up. Here we go. I'm going to zoom in a little bit for us. Revenue of $162 million. So I said in that members preview video that I thought it would be in the range of 162 to 168. My midpoint was 165, so that's actually below my midpoint, but that's like $7 million above what Wall Street was expecting. So that's a beat on the top line, up 120% from the prior year, and actually quarter over quarter, that's close to a double up in revenue. Kind of crazy to think about. $240 million in net income and basic earnings per share of 85 cents. So again, that is a massive beat on Wall Street expectations of the negative 16 cents earnings per share. We had, let me go back to my post here and I'll tell you what we had. We had net income of $260 million and it came in at $240 million. So we had a $20 million difference there. It'll be interesting to see where we were off on our numbers. Obviously, it's impossible to be 100% accurate. There might have been some more depreciation. There might have been some more SG&A. There might have been an impairment expense that we didn't account for. No idea, but we were a heck of a lot closer than what Wall Street was. Marginal cost per Bitcoin decreases to 6% to $34,000 at owned facilities. I'm going to have to run the numbers on that. I don't know how they're coming up with that number, to be quite honest with you, because my numbers gave me, well, you can see it on the picture here, $50,000 cash cost and $84,000 all in, including those non-cash expenses like depreciation and stock-based comp. So I'm going to have to run my numbers later tonight to figure out how they're coming up with their $34,000 marginal cost per coin. I would assume that's just kind of their hands-on cost per coin, but we'll dig into that later, and I'll talk about that later. Let's keep digging through this press release. The CEO, Zach Bradford, said, "This quarter we saw the impact of continuous improvements across what we believe to be the most important industry metrics: operating hash rate, fleet efficiency, marginal cost to mine, Bitcoin treasury, and portfolio uptime. We exceeded 2024 guidance and surpassed 40 exahash per second in January while driving fleet efficiency down to 16.15 joules per terahash." Sounds complicated. That's just very, very efficient. I think that's second behind Iris Energy. I guess it's Iron now. And that's improved a lot over the last year. CleanSpark delivered $162 million in revenue at a marginal cost to mine of approximately $34,000 per Bitcoin for the quarter. We are well on our ways we're well on our way towards achieving 50 exahash per second in the first half of 2025. We expect this growth will happen in the communities in which we already operate through expansion and greenfield projects in Wyoming, Tennessee, and Georgia. I think the grid acquisition is going to help them out a lot with this. They've talked about how 2025 is going to be much more of a building out the pipeline rather than acquiring turnkey Bitcoin mining facilities like they've done in the past. That should lead to some more operational efficiencies and improvements there. He says, "Our regional expansion strategy was developed and refined in Georgia, and we are now replicating it nationally." And I love that. That was my one gripe with CleanSpark was geographically they were so concentrated in Georgia, and we saw it. I mean, that winter storm that just went through a couple of weeks ago, that shut down a lot of their operations. If they hadn't expanded to Wyoming and Tennessee and other states, their entire operation would be shut down. So that is a risk to Bitcoin mining operations, geographic concentration. So I'm glad that they're expanding more nationally and away from the Southeast. Anyways, this is the CFO, Gary Vecchiarelli, says, "Our capital strategy continues to evolve, as demonstrated by the closing of our $650 million convertible bond with industry-leading terms and the conclusion of our at-the-market offering program." Yeah, if you guys missed that, there is going to be zero dilution, at least at this point in time, zero dilution via an ATM program moving forward. That's huge. And, you hear all these people online complaining about dilution. Well, it's over. It's done with for now. And especially if the company can start generating yield on their HODL balance, you might not have much dilution ever again. And that's a big, big change. That's a new era for the company. I made a video about that a couple of months ago. He said, the CFO said, "We overcame virtually all of the halving impact on the Bitcoin block subsidy while growing our current Bitcoin treasury to over 10,500, 100% of which was entirely self-mined by CleanSpark and exclusively in the United States of America. We have one of the cleanest balance sheets in the industry, that's a fact, and look forward to utilizing it through our institutional-grade Bitcoin treasury team and strategy." I love that. CleanSpark is not scared to brag about how they have mined 100% of their Bitcoin HODL balance. And I think that is a huge deal that a lot of investors kind of just they push to the wayside when they look at MicroStrategy or Mara. They think that buying spot Bitcoin's the better investment of funds, but it's not, because that increases your average cost per coin. And what do you know? Like, even in bull markets, you guys have seen it. In bull markets, Bitcoin can fall 30, 40%, and all of a sudden, the MicroStrategy who's borrowing money via convertible bonds to buy Bitcoin is going to be down on their Bitcoin purchases. And what does that do? Well, that makes any future buyers of their debt unwilling to buy their debt if prior holders of the debt are now underwater on the stock price. So there's a lot of different nuances there, but I'm still 100% on board with the self-mining strategy to acquire Bitcoin being the better strategy. Rather than buying spot Bitcoin, increasing your cost per coin. Let's see. Gary continues, "CleanSpark's financial strength continued to grow in fiscal Q1 with 57% gross margin, nearly $2.8 billion in assets." Hang on. $2.8 billion in assets? What is the market cap of this company? $2.9 billion market cap. And what did this say? $2.8 billion in assets? So the company is trading basically at net asset value right now. And they have $1.2 billion in liquidity. See, this is what I'm talking about. This doesn't add up, and a lot of people aren't going to have the patience to see this through. But this is something I've been calling out for a long time. Yeah, people are going to sell their investments in the Bitcoin mining companies. They're going to sell their investment in CleanSpark because last year was a lost year for the stock, even though Bitcoin increased quite a bit. But now all of a sudden, there's room for margin expansion there's room for multiple expansion on top of earnings expansion for the Bitcoin mining stocks. And I think that's a big deal. That is a huge deal. For the MicroStrategies, there's not much more room for multiple expansion. That's why I think right now, the Bitcoin miners and CleanSpark in particular, of course, are set up for outperformance in 2025. Again, not financial advice. I don't have a crystal ball. That's just my best guess as to what's going to happen. Anyways, let's finish this press release. We're taking our time going through it. We continue to invest in ourselves because why buy Bitcoin at current spot prices when we can mine it for $34,000? They included that quote right in the press release. You kind of have to respect it a little bit. Even if you're on the other team, you have to respect that a little bit. They're proud of their strategy, and even though it hasn't really been rewarded yet, they're not backtracking on it. Okay, financial results. We kind of covered all of this. Increase of $88.5 million, or 120% from the same prior fiscal quarter. Net income, positive net income. And you guys should check this for me. I'm not sure if this has ever been done at CleanSpark or in a Bitcoin mining company. Positive net income and positive earnings per share. So they did, well, let's see. Net income of $247 million, and I had it at $260. So my net income estimate was about $13 million off. Again, I'm going to have to look at the difference there. Okay, see, I'm proven wrong right here. They say this, compared to $26 million in net income and 14 cents per share for the same prior year period. So I just was proven wrong there. Anyways, adjusted EBITDA increased to $321.5 million. That's insane. Here's the balance sheet, $275 million in cash, $929 million in Bitcoin. Total current assets of $1.2 billion. That's just cash and Bitcoin combined. Total mining assets of almost $1 billion. So that's prepaid deposits and deployed miners for total assets of $2.8 billion. And they have, let's see, total liabilities of $757 million, which what that means stockholders' equity is $2 billion. Again, for a company that's market cap is $2.9 billion. That's insane. I mean, if you can't look at CleanSpark and think that it's trading at, think that it's trading at a discount right now, I don't know. Our thinking does not align if that's true for you, just based on these numbers alone. The company had working capital of $1.2 billion as of December 31st, 2024, including capacity of $50 million on the Bitcoin collateralized line of credit. And that line of credit is through Coinbase. Okay, so that took us a while to get through that press release. It looks like the market is happy with it after hours, up 5.18% right now. It'll be interesting to see if that holds. Again, generally, the markets have a pretty good idea of what the numbers are going to come in at. I did mention that I thought the net income and the EPS numbers might be a bit of a shock to Wall Street because I don't think they've really caught on to the new FASB accounting rules. And so far, it's looking like that might be true. A 5% pop is really, really good. Yesterday, MicroStrategy was kind of the first Bitcoin company to report earnings. And after hours, their stock was down, and it was down 3.34% today. So this is really good. This is really, really indicative of a good initial reaction to earnings. Now it's only up 3.8%. So like I said, we'll have to see how much of that gain sticks. I think a lot of the unexpected news that we might get will come in that earnings call, and I will be covering that here in this live stream. So be sure you stay tuned in for that, because that's where you really get alpha in earnings calls. That other people might not be willing to do the research to listen to the earnings calls, read the press releases, read the SEC filings. But man, if you put in the time to do it, you're usually gonna outperform. Anyways, let's talk to the chat here a little bit while we're waiting for the earnings call to start. Let's see. CleanSpark's at $11 right now. Looks like it's cooled off a little bit since you sent that through. Let's see. Suzanne says, what do you think about stock price now for CleanSpark? I think it's manipulative. I mean, I never like to scream manipulation in the stock market because it's just a market of buyers and sellers. And at the end of the day, I don't know. Manipulation just really doesn't matter. It's never really mattered to the stock market. If I believe I'm buying an asset at a very, very cheap valuation when I buy CleanSpark stock, and that's all I really care about. The market can do what it wants. All I'm using it for is information. If they want to sell down my assets even more, the value of my holdings even more, that shouldn't that shouldn't make me want to sell my assets to them, because I truly believe that the assets I hold, the shares I hold in CleanSpark stock, are worth far more than they're trading at in the public market today. So yeah, sure, there might be some manipulation going on, but at a certain point, manipulation always gets corrected. A short squeeze always happens. You can only manipulate an equity for so long, and there's enough shares outstanding with CleanSpark. I think they're in the $180 million, I think they're I'll just say they're well in the hundreds of millions of shares outstanding. Whenever there are that many shares outstanding, it's kind of hard to manipulate a stock. But that's all I'll say on that. 123, hey, thanks, man. So he says, for any non-members watching chat, I bought the membership and can vouch that's worth it. Thank you. Listen to the man. You don't even have to listen to me tell you. But yeah, live stream chat's only $3. So if you want to ask questions or chat with everybody else, hit the join button down below. And we always post good stuff in the Discord server as well. Let's see, up 7% after hours. That's cooled off to up 5% right now, I'm seeing. Still a pretty good initial reaction. 123, same person says, once Bitcoin recovers to $102,000, I think CleanSpark will be 14 or 15. It could be, and honestly, it is an earnings report that can kickstart outperformance. That's what's done it in the past for CleanSpark. Is they've come out with just kind of a blowout quarter, which for whatever reason takes the market by surprise, and then all of a sudden the market has to catch up and say, oh, whoa, this company's cheap. And that's, I've said that to you guys before. I've been through too many time periods right now, or already in holding CleanSpark stock, where CleanSpark underperforms for a set amount of time, and then it all of a sudden outperforms by a bunch. I've been through that too much for a year of underperformance to really bother me that much. Again, it's all valuation for me. I really believe that my shares are much more valuable than what they're being valued at right now, and that's all that matters to me. I really don't care what the market tells me short term. I think I'll be proven correct over time. When you're an individual stock picker, by definition, you're going against what everybody else is telling you. Everybody else is valuing CleanSpark at $10.41 per share. Well, if you're buying it, you're saying, I value it at higher than $10.41 per share. So you're going directly against what the market is saying. And that's why being an individual stock picker can be somewhat challenging at times. Okay, let's see. Any more questions here in the comment section? I don't see any as of now. But be sure you type in the chat if you do have anything that comes up, or you want me to cover anything, or have questions or comments. I'll go over them. For now, I'll switch back to my browser tab, and we can kind of track what CleanSpark does after hours. It's kind of settling in around up 5% after hours right now. I think that's a pretty good initial move. Make sure no additional press releases came out. Nothing that I see. I'm proud of this quarter. I thought it was going to be very positive. It is a very positive one. Again, I'm going to look at that SEC filing, the 10Q, when it comes out, to see how they're coming up with marginal cost per coin. That apparently decreased 6% to $34,000 at their owned facilities. And yeah, moving forward, all of their mining operations are going to be at owned facilities. They did not renew their contract with CoinMint, which is the only hosted miners that they had. So now they're going to wholly own all their facilities, all their mining rigs, and all the profits from mining Bitcoin, which should increase margins over time. I'm assuming cost per coin probably decreased just because of an increase in mining rig efficiency. They replaced some older generations with newer generations. That could be part of it. Again, we're going to have to kind of look at that, the 10Q later. We're going to have to go look at the 10Q later to see really how they're coming up with that number. Maybe they'll discuss it in the conference call. Had to take a drink there. Sorry. 123 says, read StockTwits reactions. Geez, I haven't been on StockTwits in forever because it's just such a cesspool. But for fun, I'll pull it up. I'm going to have to close it out if there's anything like inappropriate that people post. So I know that happens a lot too. Let's see. I'll zoom in. People saying huge beat. It's already trading at over 3 billion market cap. So wise up. This pop won't last. I'm short. See, it's just like stupid crap like that like, okay, thanks for your contribution to the discussion. Like, I don't know. Like, It's already trading at over $3 billion market cap, but the net asset value of the company's $2.9 billion, and you think that's overvalued? Like, this StockTwits doesn't do much to me. Oh, and now it's going to make me sign up or log into my account, so I don't really want to do that. Anyways, I don't know. StockTwits can say what they want. It's kind of a waste of time if you ask me. But it is fun to look at that every once in a while. And I just kind of got tired of people on StockTwits just like personally insulting me and my family and like finding pictures of me and my family and defacing that. Like, it just is like, it's not a group of people that I really like to be around. X is a lot better. There's still some of that crap on X, but it's a lot better. I don't know. I don't need the negativity in my life from StockTwits. It's just a cesspool of stuff that really isn't helpful to me. Let's see. Chad says, is StockTwits going 100 miles an hour? It always is. It always is. 123 says, Bulls are saying great quarter, Bears are saying bad quarter. LOL, the usual. Yeah, if you ask, like, honestly, if I was a bear on CleanSpark, I don't know how I could look at these numbers and say this was a bad quarter. Like, being completely honest, if I was short selling this company, there is nothing, at least in this initial press release, that tells me I need to double down on my short because this is a bad quarter. Like, I don't know. That just seems like nonsense to me. And, it's kind of, I don't know. It's not even just for CleanSpark. It's just the bears in the Bitcoin mining space right now. They kind of need to be checked. And I think it's coming. I think the Bitcoin miners will have their day in the sun again. It's going to come. But it takes a lot of patience that most people don't have. And that's just a fact. What's my 2025 fair value? Let me see. I think I have my... No, I don't have it pulled up. Let me see. I'm going to try and pull up my Excel spreadsheet over here. I don't think you guys will be able to see it. But if it does load for me, I can tell you what it is. And I'll have to change these numbers after this quarterly report. I always change them when we get new information. I have... you guys can't see this, can you? Dang it. Oh, well. You can download the spreadsheet in the Discord server, Tyler, and you'll see my fair value. My fair value, and again, I'm going to change these numbers after this report, but my fair value is $35, assuming Bitcoin reaches $150,000 this year, which there's no guarantee of that happening. Let's say I decrease my $150 to just $100,000 per Bitcoin this year. My fair value goes down to $22.32. You can kind of mess with your exahash per second and what you think the Bitcoin network hash rate will be, and CleanSpark's total will accumulate to over time. But right now, this tells you I have today's inputs of $100,000 per Bitcoin inputted, and it gives me a fair value right around $20 per share. But you can kind of mess with those numbers yourself if you download the spreadsheet. Anyways, I'm going to close out of Excel now. But there you go. Right around $20 per share at current Bitcoin prices. Okay, it's StockTwits bots. Yeah, I do think there's a lot of bots on StockTwits too. StockTwits is indeed a cesspool. Yeah. Suzanne says, I am a big fan and like to listen to you. Me and my delayed husband bought 5 years ago after you giving the best info. Hey, thanks, Suzanne. I don't know what you mean by delayed husband. I hope that's not like bad news. So sorry, I don't know. But thank you so much for your support, and I hope nothing bad has happened there. So thanks for being a fan. It means the world to me when I get comments like that. It sort of helps drown out all the negativity that gets slung your way when you're making opinions online about the stock market and specific stocks. So you're welcome for the info. I don't know if it's the best info out there, but I do my best. I do a lot of research, and I do take pride in the research I do. So thank you so much, Suzanne. That means a lot to me. Suzanne said, dang, Suzanne, he's not among us. Oh, man. Sorry, Suzanne. Oh well. It looks like CleanSpark is kind of still connecting you two, right? Yeah, rest in peace to Suzanne's husband. I'm sorry to hear that, Suzanne. I'll put you in my prayers. I don't know how long ago that happened, but I'll put you in my prayers for peace and comfort. So sorry that happened to you. I'm glad to be a light in your world, though, and I'm glad that I'm somebody you like to listen to. So thank you so much for your support. It means a lot. Let's see. We're a few minutes away from the. Let's see. Sorry, distraction quick. We're a few minutes away from the conference call, and it looks like it's live now. So I'm going to have to switch my screen and remove that. You guys won't be able to see this. I'm going to present, share screen. Now I have to select an individual tab. I'm going to share audio, and okay. I'm not sure. Okay, there is music going on. There's no talking going on yet. But let me know if you can what the stock's doing after hours. I think it's still up about 5% after hours, which is a great start. Up 4.3%, so it's cooled off a little bit. But this earnings call, hopefully we get a little bit more information. And thank you guys for helping me solve these audio issues. That's kind of annoying. I don't know why they're happening, but thank you guys for let me know if it ever happens that you can't hear the audio again. I'll just have to keep restarting it and unplugging and
Good
plugging it back
afternoon.
in.
My name is Krista,
All right, looks
and
like
I
the
will
call's
be your
going on,
conference
so I'm going to
operator
mute my
today.
mic so you guys can hear.
We'll discuss our growth strategy in more detail later. One thing is clear. The regions we have strategically selected will more than support our expansion. Being an industry leader doesn't require topping every important industry metric. We are the only operator ranked in the top 3 across key measures of total hash rate, fleet efficiency, marginal cost per Bitcoin, total uptime, and Bitcoin HODL. This consistency has propelled us to achieve escape velocity, driven by both scale and grit. And as we proceed down the path to 50 exahash and beyond, every additional exahash beyond our quarter-end position of 39.1 further enhances our operating leverage and margins, delivering these gains straight to the bottom line. Simply put, we are positioned to mine more Bitcoin more profitably over the long run. A key milestone this quarter was securing a $650 million convertible bond, a significant achievement for our company. Unlike our competitors, we have taken a different approach and used the proceeds to invest in our growth and capital strategy. While Gary will provide further details later, it's important to highlight that our path to reach 50 exahash by the first half of 2025 is fully funded, without relying on equity to fund that growth. We expect to achieve this target solely through greenfield construction and expansion of our sites in Georgia, Wyoming, and Tennessee, a natural extension of our proven land and expand strategy that has driven our success thus far. We've laid the foundation to continue our growth with maximum efficiency, and now the road ahead is ours to shape. With our expertise, strategy, and relentless drive, I have no doubt that our team will not only meet, but exceed expectations, setting new benchmarks for success. With this foundation in place, let's take a closer look at the numbers. Our first quarter revenue was $162.3 million, representing a 120%
Thank
growth.
You so much.
Compared
We
to the
still need to
same
meet up
period
for a
last
steak
year.
sometime. Thanks for that
We
donation.
closed the
It means a
quarter
lot.
with net
Thank you so
income
much.
of $246.8 or 85 cents per basic share, while our adjusted EBITDA, a key measure of operational efficiency and financial strength, grew to $321.6 million, setting a new benchmark for the industry. While Bitcoin's price appreciation during the quarter was a contributing factor to our strong performance, it was not the sole driver. Our success is the result of our best-in-class Bitcoin mining operation, disciplined capital strategy, and long-term view of Bitcoin as a strategic asset. Unlike others who sell mine Bitcoin immediately, our strategy of holding self-mined Bitcoin on our balance sheet, coupled with world-class operational execution, continues to be a key differentiator in delivering these exceptional results. During the quarter, the average price of Bitcoin exceeded 83,000, reaching a peak above 108,000, where our marginal cost per coin was approximately 34,000. This is a $2,000 improvement from the prior quarter. Meanwhile, our total Bitcoin in treasury stood at 9,952 at the end of the quarter and reached 10,556 as of the end of last month, demonstrating our ability to outpace the increasing global hash rate and mining difficulty. We now hold one of the largest self-mined Bitcoin treasuries in the industry. Every Bitcoin was mined right here in America by American employees using locally sourced power that supports rural communities, reinforcing CleanSpark's commitment to responsible growth and operational excellence. Turning now to our fully owned and operated infrastructure. Our team not only met, but exceeded our 37 exahash target, closing the first quarter of our fiscal year at 39.1 exahash, solidifying our position as the largest Bitcoin mining operator on U.S. soil. Our fleet efficiency stood at 17.59 joules per terahash at quarter's end, and has since improved to 16.15 joules per terahash as of January 31st, making our fleet one of the most efficient in the world, a metric we expect to continue improving in the coming weeks. Our strategic presence in energy-abundant states strengthens our ability to scale efficiently. By all measures, this was an exceptional quarter, one that sets the stage for our next major milestone, 50 exahash. The foundation for this growth was laid in January of last year, when we secured 60,000 S21 units with a strategic option to acquire an additional 100,000 units at the same low price. This commitment gave us a significant competitive advantage in scaling efficiently over the past year. Building on that success, we expanded our investment in efficiency 6 months later with another order for 26,000 S21 XP immersion units, the most efficient model to date, again securing an option for an additional 50,000 units. This structure enables us to deploy new highly efficient machines in alignment with our energization capacity, ensuring immediate productivity and eliminating idle assets. With these units secured and financing in place, we are advancing greenfield development and facility expansion across 5 sites in 4 states, positioning us to achieve 50 exahash in the first half of 2025. Our option contract also provides the flexibility to scale beyond 60 exahash at a cost of $21.50 per terahash, which is significantly below the spot market, where prices are currently more than 37% higher. The infrastructure required to achieve the additional 10 exahash necessary for our mid-year target is already sourced, including transformers, power distribution, low voltage components, and additional immersion cooling infrastructure, like those successfully deployed in Cheyenne, Wyoming, and Jackson, Tennessee. These projects underscore 2 key points. First, the proven performance of our most advanced S21 XP immersion units. And second, the operational efficiencies we continue to unlock with our cutting-edge mining environments. Construction is already underway in Tennessee, Wyoming, and Georgia, and we will provide updates as additional megawatts and exahash come online. While M&A is not required to reach 50 exahash, we remain disciplined in evaluating strategic opportunities. In a bull market, acquisitions often come at a premium and can be capital destructive. However, we continue to assess opportunities selectively, particularly those involving companies with strong power contracts but lower efficiency fleets. Other targets may include small-scale sites where owners face capital constraints in upgrading their fleets and lack access to next-generation hardware at competitive pricing. For long-term expansion beyond 50 exahash, we may also explore greenfield projects with extended lead times that require substation construction, projects we can develop to CleanSpark's high standards. Additionally, as some operators pivot from mining to high-performance computing, we may see opportunities to acquire Bitcoin mining-specific assets at attractive valuations. In summary, we remain focused on disciplined growth, operational efficiency, and strategic expansion, ensuring we maximize shareholder value as we scale toward 50 exahash and beyond. Over the years, we have refined our approach and proven that operating CleanSpark-owned miners in CleanSpark-managed racks maintained by CleanSpark employees is the most efficient way to deliver on our commitment to operational excellence. This fully integrated model not only optimizes site performance, but also mitigates the counterparty risks that have challenged the industry, risks that were not always fully appreciated at the time. Expanding on that theme, I want to address another model that introduces similar counterparty risk, partnering with the artificial intelligence and broader high-performance computing sector. While some of our
they're going
industry
at it.
have pursued a speculative approach to HPC,
Wow.
repurposing a Bitcoin mining
Bold.
facility for high-performance computing is far more complex than it may appear. These deployments require extensive customization, integration, and optimization, not just at the hardware level, but also across software and physical infrastructure to meet the increasingly sophisticated demands of AI and enterprise computing. These challenges have a direct impact on both revenue generation and profitability. By contrast, Bitcoin mining remains an efficient, proven, and scalable business model. We can bring a Bitcoin mining site online and start generating revenue within months, whereas a fully developed HPC site can take 2 to 5 years, not including the time and cost required to secure high-quality, long-term customers. At CleanSpark, we remain disciplined in our approach, focusing on high-return, strategic opportunities that align with our core strengths. As we evaluate emerging technologies, we will continue to apply the same rigor and operational excellence that have defined our success in Bitcoin mining, ensuring that any expansion into adjacent markets is both measured and value accretive for our shareholders. And now I want to take a few moments to address the significant shift in sentiment we are seeing in Washington, D.C. regarding Bitcoin. Over the past 4 years, we've built our business in the face of meaningful regulatory headwinds. While this presented challenges, it also strengthened our resilience, operational discipline, and strategic focus, ultimately positioning us well for more constructive regulatory environments. Since the November election, that environment has begun to shift. President Trump has expressed consistent support for our industry, reinforcing his commitment through key policy positions and regulatory appointments. One of the most pivotal developments came on January 24th, when the Securities and Exchange Commission repealed SAB 121, an accounting rule that discouraged banks from offering digital asset custody services. This repeal marks a major turning point for Bitcoin regulation, clearing the path for major financial institutions to play a more active role in participating in the Bitcoin ecosystem and broadening access for institutional and Main Street investors alike. In addition, we are encouraged by strong legislative leadership in Congress. Two of the most vocal advocates for our industry, Senator Lummis of Wyoming and Senator Hagerty of Tennessee, have been appointed to the Senate Financial Services Subcommittee on Digital Assets. Their deep understanding of our industry will be invaluable as lawmakers work to establish a more balanced, responsible regulatory framework for Bitcoin and digital assets. Beyond regulation, energy policy will also play a critical role in shaping the industry's future. As Bitcoin mining and data center expansion drive new demand for electricity, energy markets are naturally experiencing upward pricing pressure. Given that electricity is the largest component of our direct costs, any policy initiative aimed at reducing energy prices will have far-reaching implications for our business. President Trump's stated commitment to make the United States the global center of Bitcoin mining signals a potential shift towards more energy-friendly policies, an outcome that could enhance both industry growth and U.S. competitiveness at the global stage. We will continue to monitor these developments closely and remain engaged with policymakers to ensure that our industry has a seat at the table as these regulatory and energy policy decisions unfold. On Monday, January 27th, our management team, alongside employees, families, and friends, gathered at the NASDAQ market site in New York to ring the opening bell. marking the start of the trading day and celebrating a milestone of 5 years in the making. We were there to commemorate the 5th anniversary of our uplisting to NASDAQ, a moment made even more meaningful by sharing it with many of the people who have worked tirelessly and sacrificed to build CleanSpark into what it is today. But the truth is a bit more complex. This celebration wasn't just about our 5-year milestone. It was also about resilience. When we uplisted 5 years ago, the COVID-19 pandemic put our opportunity to ring the bell on hold. Missing that moment with our team was a deep disappointment. But if there's one thing we've learned at CleanSpark, it's that setbacks are often just delayed victories in disguise. As a student of philosophy, I draw inspiration from Marcus Aurelius and his writings in Stoic philosophy. As a management team, we've embraced many of these principles in leading CleanSpark and have worked to instill them as a core part of our culture. One passage has always stood out. The impediment to action advances action. What stands in the way becomes the way. That mindset, grit, perseverance, and the ability to turn obstacles into opportunities defines how we operate. It has shaped our approach to scaling CleanSpark into a repeatable, scalable, and durable Bitcoin mining business. So instead of dwelling on what we missed, we refocus and move forward. And standing on that NASDAQ podium 5 years later, it felt less like a delayed celebration and more like the culmination of everything we've worked towards. But it also represented a new beginning as we continue on this journey at scale. That feeling was reinforced as we spent time in New York meeting with investors for Capital Markets Day, where we shared our vision for the future and explained why the path to 50 exahash and beyond is wide open for CleanSpark. Now, before turning things over to Gary, I want to take a moment to recognize the exceptional team behind CleanSpark's success. As we've outlined before, we set a target to reach 37 exahash by the end of the calendar year. Not only did our team deliver, they exceeded expectations, surpassing 39 exahash before the ball dropped in Times Square on New Year's Eve. Standing on the NASDAQ podium, my thoughts turned towards our teammates working in Nevada, Wyoming, Tennessee, Georgia, and Mississippi. Some of them may not have even had time to watch the ceremony because they were already working towards our next target, 50 exahash by mid-year. So when I rang the bell, I rang it for them. Bitcoin mining may not have traditional customers, but the great irony is that it may be one of the most people-centric businesses in the world. CleanSpark's success is built on the talent, dedication, and relentless drive of our people. And as it always has been, human capital remains our greatest asset. Now I'd like to turn the call over to Gary for a more detailed review of our financial results and a look at our balance sheet. Gary?
This should be pretty interesting
Thank
from
you,
Gary.
Zach. As Zach mentioned,
Marginal
our
cost per
first
coin,
fiscal
gain on
quarter was
Bitcoin collateral, all that
spectacular for
stuff.
CleanSpark.
Hopefully he talks about
Let's
it.
dive directly into the numbers, which I'm excited to share with you. Our revenues for the quarter were $162.3 million, an increase of $88.5 million, or 120% over the same quarter last year. This increase was primarily driven by an overall increase in average Bitcoin price. Of importance, year over year, we produced only 4% less Bitcoin compared to the same quarter last year, despite block rewards being cut in half this past May. We are almost at the same number of Bitcoin produced as pre-halving due to our increasing exahash and increased fleet efficiency from our best-in-class miners. It is also important to note that our average revenue recognized per Bitcoin produced in Q1 was almost $84,000, which is an increase of 130% over the same quarter last year. When compared to the immediately preceding fourth quarter, our revenues increased 82% due to the increase in Bitcoin prices and our Bitcoin production. For comparison, we produced 480 or 33% more Bitcoin in the first quarter than the fourth quarter, and the average revenue per Bitcoin at our wholly owned sites increased 38% between the periods. CleanSpark has industry-leading uptimes typically in excess of 98%. However, this past quarter, we saw a slight temporary decrease in our uptime to 94%. This was driven by several factors. Foremost, the quarter started with limited exahash online because of a hurricane. Second, we moved approximately 80,000 miners as a result of our fleet upgrades and racking at new locations. However, I want to point out that while we saw a slight dip in one of 5 key industry metrics, there's an inverse relationship as we saw significant gains in efficiency and Bitcoin produced, as well as reduced cost per coin. This upgrade resulted in significant ROI as our fleet efficiency dropped from 21.94 joules per terahash to 17.59 joules per terahash, or 20% between Q4 and Q1 alone. And as I mentioned earlier, our Bitcoin production rose 33% between periods. Looking at our margins, our gross profit increased by $47.1 million year over year, with a profit margin of 57% for this quarter. When compared to the immediately preceding fourth quarter, our gross margins increased $59.9 million, or 186% during the periods. While you have heard us mention several times that our fleet efficiency continues to increase, the power of scale is demonstrated here through our margins. For example, our cost to mine a Bitcoin was $36,250 in the fourth quarter. However, in the first quarter, we saw that cost per Bitcoin decrease to approximately $34,000, which represents a quarter-over-quarter favorable improvement of about 6%. Our strategy to maintain one of the most efficient fleets in the world, combined with best-in-class uptime and operations, is translating to significant margins, and all while the global difficulty has increased during the same time frame. This quarter, we recognized net income of $246.8 million, which is a significant improvement from prior periods. This increase was primarily driven by the growth in the fair value of our Bitcoin and a gain related to Bitcoin returns as a result of our paydown of the Coinbase line of credit. This gain continued with $321.6 million of adjusted EBITDA for the quarter. As I look over the numbers, I want to provide some additional color. Our cost of power for the first quarter was 4.9 cents a kilowatt hour. This was higher than our cost for power of 4.4 cents in the same quarter last year, and slightly higher than our fourth quarter cost of 4.8 cents. While our cost of power per kilowatt hour in this quarter is running higher than in prior periods, our margins are far exceeding this increase, thanks to the efficiency of our fleet and on-site operations. Additionally, with Bitcoin mining economics better than prior periods, we have more headroom and capability. This allows us to run our fleet through periods where the cost per kilowatt hour is elevated, because we do not manage the business to a price per kilowatt hour, but rather to a margin and profitability on a per coin basis. This is why you hear us say we have reached escape velocity and always prioritize cash on cash returns. With respect to our indirect costs, in the first quarter, our total professional fees, payroll, and G&A expenses totaled approximately $34.8 million. This is a decrease of $5.8 million, or 14% compared to the preceding fourth quarter. This decrease was attributed to lower professional fees of approximately $1.8 million, primarily due to the transactional fees we had in Q4 related to M&A activities. Additionally, payroll expenses decreased 16%, or $3.9 million quarter over quarter due to year-end bonuses recognized in the fourth quarter. Lastly, our G&A expenses saw a slight decline of about 1%. While professional fees may fluctuate with activity related to M&A and financing transactions, I'd expect indirect expenses otherwise to be relatively flat or increase only a nominal amount for the remainder of the fiscal year. With the combination of the increased margins and relatively flat indirect expenses, this is an example of how CleanSpark is delivering operating leverage at scale. Next, I want to talk about the balance sheet, the liquidity position, and our larger overall capital strategy. We believe our balance sheet is one of the best in the business. We have almost $2.8 billion of total assets, almost half of which is liquid in the form of cash and Bitcoin. As you are aware, we issued a $650 million convertible note transaction, which we closed on December 17th. The industry's only 0% coupon, 100% up with stock buyback. With the net proceeds, we purchased a cap call, which made the effective conversion premium 100%, or $24.66 a share, and we bought back approximately 11.8 million shares of our stock. The stock purchase is reflected as treasury stock, and our total outstanding shares have decreased as a result. Additionally, we used $50 million of the proceeds to pay off the line of credit with Coinbase, and that capacity remains available for us to use at our discretion. We're proud to have closed this offering, which more than fully funds our growth through 50 exahash and beyond. In addition to funding the growth to 50 exahash, share buyback and cap call, the remaining proceeds will allow us to keep adding the Bitcoin we mine to our balance sheet for the near term. Beyond our expansion efforts already underway, we remain well positioned to continue executing on opportunistic acquisitions. Importantly, this offering provides our stockholders with greater clarity on near-term share count, given our ATM offering was completed in early November, and we have no immediate plans to commence another equity or ATM offering, as the capital received from the convertible notes sufficiently covers our near-term strategic objectives. As of the close of the quarter, we had over $1.2 billion of liquidity, which includes approximately $276.6 million cash and almost 10,000 Bitcoin. You may have heard us speak about our conservative approach to debt on our prior calls. I expect that we will continue to be cautious in further leveraging our balance sheet, as we will evaluate our balance sheet health on a net debt basis to ensure we have proper liquidity to operate the business and service near-term debt at all times. We continue to have discussions regarding non-dilutive or less dilutive options, which is reflective of the maturity of our capital strategy as we build out our capital stack and utilize our very profitable operations and clean balance sheet for accretive growth opportunities. Turning to our Bitcoin treasury, it's important to note that it represents the fourth largest position amongst public corporations in the world, trailing only a handful of competitors and larger than the holdings of major corporations such as Tesla, Coinbase, and Block. In contrast to many of our peers, our Bitcoin HODL was mined exclusively in the US by CleanSpark at a significant discount to the spot market price on the back of our best-in-class operations. Our net debt approach to the balance sheet gives us far more flexibility when it comes to cash management and funding future growth. As impressive as our Bitcoin stack may be, we want to put it to work productively to help fund the business. We're actively building an institutional-grade Bitcoin treasury team and strategy with the goal of preserving capital, opportunistically managing cash, and driving a lower cost of growth capital in non-dilutive ways.
That's huge.
Because of Bitcoin's unique place as an emerging global financial asset, we can adopt best practices in treasury management from traditional finance while harvesting volatility for our benefit. We are currently engaged with high-quality counterparties to evaluate a holistic approach in utilizing our treasury to meet business needs, and we expect to go live shortly while ramping up activity over the ensuing quarters. As we mentioned earlier in the call, we want to invest in ourselves and the business. After all, why buy Bitcoin at $100,000 when you can mine it as low as $34,000? With that, I'll turn the call back over to Barbara to open the floor for questions.
Thank you, Gary, for that very detailed financial overview. We'll now
Really good
open
stuff.
the floor to
Really good
questions
stuff.
from the analyst
Hopefully we get some
community.
more from this Q&A
Krista,
too.
please provide instructions and manage the queue for Q&A sessions.
At this time, I would like to remind everyone, in order to ask a question, please press star one on your telephone keypad. We'll pause for a moment to compile the Q&A roster. Your first question comes from the line of Mike Colonnese with H.C. Wainwright. Please go ahead.
Good afternoon, guys, and congrats on a really strong quarter here. Thanks for taking my questions. Gary, you alluded to some of this on your prepared remarks, but just curious if you could provide a bit more color here. So you guys have built out a nice reserve of Bitcoin over the past year, now have over 10,000 Bitcoin on the balance sheet. Any further details you can share in terms of what your Bitcoin treasury management team is strategizing to put those coins to work, be it the counterparties, current market yields you're seeing, and what portion of the treasury you'd be willing to dedicate to yield generation strategies?
Yeah, thanks for the question, Mike. So we are in the process right now of gathering RFPs, requests for proposals to evaluate counterparties and look at the various options. I don't want to commit to a strategy. In fact, I'll refer you to what we said last call, where it's going to be a crawl, walk, run type strategy. And ultimately, we have a number of options available at our fingertips. So we'll see how those RFPs come back and really what the transaction opportunities look like. But ultimately, I don't think in the near future we're going to leverage, 100% of the HODL balance or, put 100% of it to work. We're just going to slowly kind of leak into it. And we'll have more to report on in future quarters.
Got it. Fair enough, Gary. And Zach, maybe for you, this one here. How should we think about the cadence of hash rate growth from the 40 exahash deployed today to your mid-year target of 50 exahash? I know you guys are working on a number of projects across the portfolio. So it'd be great to get a better sense as to when you expect those projects to energize.
Yeah, appreciate it. And thanks for always joining the call, Mike. It should be a pretty even cadence over the next 6 months as we roll things out. So I don't think it'll be that chunky. It'll just kind of be a little bit added every single month as we move along through the period. So as we mentioned, the majority of this, well, all of it is happening essentially in our backyard. And so these are projects at existing sites for the most part, with a few greenfield sites added on, that we're basically rolling into things. So again, this is going to be a very natural cadence for us just to add that remaining 10 exahash over the next couple months.
Great. Thanks again, guys.
Hey, thanks, Mike.
Your next question comes from the line of Brian Dobson with Clear Street. Please go ahead.
Hey, thanks very much for taking my question. So you alluded to your capital allocation strategy, which is shown through your, call it the fruits of which are shown through your relentless sequential improvements. But do you think you could speak a little bit to your management philosophy that drives that improvement and separates you from your peers?
Yeah, Brian, thanks for joining. I'll jump in on that one. So, we live at the intersection points of, so many things ultimately results in the profitability of mining Bitcoin. And, living at the right point of that crossroads is ultimately how we look at it, where we don't feel the need to pursue a number. And I think that that's a differentiator in our management team. We haven't held one thing out and said it's the most important, because we actually believe that the intersection points are the most important part. So, as we pursue these KPIs and, ultimately how we see it's critical, we think our secret sauce is really the grit, perseverance, dedication, of our people. And I think that as we go through that, it's about instilling the same values that we've had since really the founding of the company. We're ready to work hard, all of us top to bottom, and I think that shows through ultimately in the results.
Yeah, thanks very much. And then do you have any comment on the potential for in-kind exchange in terms of driving yield on the HODL?
Yeah, so look, I think that the applications that are on file for the ETFs are a really positive thing overall for Bitcoin. And it'll be interesting to see how that really affects it all. But, for us, we're really just focused on managing our HODL balance. We are looking at potentially using the ETFs as part of that treasury management and the derivatives that are around those products as well. But I think it really remains to be seen how it's going to impact us directly, other than just a general adoption of Bitcoin overall.
Yeah, thanks very much.
Your next question comes from the line of Brett Knoblauch with Cantor Fitzgerald. Please go ahead.
Hi, guys. Thanks for taking my question, and congrats on the quarter. Maybe just looking, and I know you guys have a lot on your plate for 2025, but kind of looking beyond 2025, I guess what type of power capacity do you have in your pipeline? And maybe in which states would you look to expand? Is it maybe within TVA, where I know you guys are very positive on?
Yeah, so there's the ability to expand in really all the regions that we're operating in. I do expect that you're going to see the majority of the growth, happen in both the Tennessee and Wyoming areas, because those are the areas that frankly have the most blue sky to them. We've been expanding for a long time in Georgia and that region, and so I think that's where you should expect to see the majority of it. Frankly, we're incredibly excited about those utilities, and frankly, their willingness to lean in and understand the value of interruptible loads in their utility. So, that willingness to continue to educate themselves, but also, both those regions, are ready and willing to adopt energy tariffs that benefit, Bitcoin mining due to the interruptibility of those loads. So that's likely to be our focus in the coming years.
Appreciate it. And maybe just one follow-up. I think if I look at kind of like your OpEx for this quarter, professional fees, payroll, G&A, all declined, and I think your hash rate improved somewhere around 40% quarter over quarter. Can you just maybe talk about the strategy you guys deploy in managing OpEx while delivering such strong growth? And, I guess how sustainable is that? And is there any incremental OpEx needed to drive you guys to 50 to 63 and beyond?
Yeah, hey, thanks for the follow-up, Brett. I think ultimately, we just built this foundational, this foundation of just indirect expenses, right? And we just have a very strict budgeting process. We watch every dollar that goes out, and really where we're investing is on the operational side. And given the fact that our cost of capex is one of the lowest in the industry, I mean, I'll remind you that we have contracts out there for $21.50 a terahash right now, which is at least 30% lower than what the fair value of those machines are. Having that focus really on operations really allows us to have every exahash that comes online almost drop to the bottom line, because we don't need that incremental corporate overhead to support $1 of additional revenue. So that's why I feel comfortable, the indirects being relatively flat for the remainder of the year, and really the only wild card is in the professional fees, and that depends on the activity of the M&A landscape.
And Brett, I'm going to add one more thing, because I think it's part of our management strategy is and how we think big about what we do. We have a portfolio of properties, but in building a portfolio, we had to solve unique problems that we prepared for. And basically, we built on our ability to expand, early on. So we're leveraging technologies such as remote management and other things that are the same types of technologies that large, hyperscale data centers are utilizing to keep their headcount down and reasonable. And so we do that across the entirety of what we do, whether it's on the overhead side, whether it's on the operational side. We've always been in an expansion state, but we wanted to plan that expansion for the future. So I truly feel that we have built a scalable business at the current size on the operations, but it's because of the thought process that occurred, 2 and 3 years ago.
Appreciate the answers. Thanks, guys.
Your next question comes from the line of Tyler DiMatteo with BTIG. Please go ahead.
Hey guys, thanks for taking the question. Appreciate the time here. Zach, I'm curious, you guys have done a really nice job kind of growing exahash over time, getting to the 40 exahash mark. But as you think about going to 50 exahash and then ultimately to 60 if you exercise the option, does going from say 40 to 50 and 50 to say 60, is the implementation different, or how could it be different given that you now have a bigger scale and you look to put those rigs to use? I'm curious just maybe how you think about the actual execution and implementation of that now that you have 40 exahash online.
Yeah, I'm going to point to a phrase we have continued to use, and that's repeatability. So everything we've done is to basically build a blueprint that can be stamped out on a repeat basis. And our goal, just like all things done at scale, is as the process becomes more and more repeatable, that we find every opportunity to drive costs down while increasing quality. And so that's been our goal. We're incredibly excited, and we've mentioned this multiple times the last few earnings calls about the technology that we're deploying on the immersion cooling side. We are seeing immense operational efficiencies and a lot of operational leverage around the way that we're deploying those, and we see it as the right blueprint to stamp out. So as we march from 40 to 50 to beyond, we see ourselves using a successful and proven blueprint that we're able to restamp on a repeat basis.
Yeah, I just want to add to that as well. I mean, we have a track record of growing exahash, right? A year ago, last January 2024, we were just a little over 10 exahash, and as we sit today, we're 40. So we have that proven excellence to be able to execute on this. and we're very confident we'll be able to get there.
Okay, great. Thanks, guys. And then my follow-up here, realizing that you have the fixed price option at the 2150 for the next level of growth in rigs. I'm curious though, how would you describe kind of the rig market dynamics? I know you pointed to, I think it was 37% higher potentially for some of the rig pricing. I guess just broadly, Zach, how would you describe some of those dynamics? And really, what are you seeing as you kind of look to keep an open mind in terms of the growth profile of the business?
Yeah, I think that as we see it, it's all about relationships. We've got deep vendor relationships, not just with a single vendor, but across multiple parties that we believe will allow us to always maintain the competitive pricing. As Gary talked about track record just a moment ago, but our track record is to, on a repeat basis, set the floor price of the rigs as new units come out. But it's also to not jump just because something comes out, which you saw in our activities 2 and 3 years ago when rig prices weren't where we thought they should be. So that the benefit of the scale we have, and frankly how far ahead we've gotten for the majority of this industry on an exahash basis, means that we have the opportunity that time presents where we can be selective about our timing. I think it's one of the things that we've done amongst the best in the entire industry is not trying to dollar cost average into our equipment, but instead is to relentlessly drive to the low cost, high quality model. And we just intend to do it again. So regardless of where the market shifts and moves to, we've got, through beyond 63, our price certainty is already there. Everything beyond that is somewhat speculative, other than, we would just look to continue to leverage our relationships to always, be best in class.
Okay, great. Thanks, guys. Really appreciate the time.
Thank you.
If you would like to ask a question, please press star 1 on your telephone keypad. Your next question comes from the line of Stephen Glagola with Jones Trading. Please go ahead.
Hi, Matt, Zach, Gary. Thanks for the question. You highlighted the benefits of increasing scale to your margins long-term in your prepared remarks. And as you approach 50 exahash, is there a point where you think increasing scale becomes less of a focus for the business versus looking to maybe increase the free cash flow generation and productivity of the assets you currently have, and also potentially returning capital back to shareholders? Thanks for your thoughts there.
Yeah, I think that I'm going to use a phrase again on, having achieved escape velocity. That's where we are at right now in the business. Is for every exahash we add, it does produce free cash flow that does flow to the bottom line, who ultimately does benefit the shareholders. I would, to make a comparison, if you look at most of the industry, based on our math, there's, less than 5 companies that even have the opportunity to achieve this same scale, which will ultimately result in positive cash flows. The balance have a lot to do to catch up. So again, I'm going to point back to what I said earlier, where time. There is going to be time to push the gas pedal all the way down, and there's going to be a time to let the car coast. And frankly, it's likely going to be driven by input cost. Input cost of materials, whether that's the servers, whether it's the infrastructure. And, rather than speculate about timing right now, it's about how well are we positioned to react to market dynamics. And I would say we're positioned amongst the very best. And so, and I think that comes in multiple forms. Again, I'm going to point to vendor relationships, the cost certainty that we've already locked into place, but also the fact that we don't have to push to catch up, because there's a point that we've arrived at where the cash flows are already flowing in a way that's, benefiting the shareholders, but also allows us to continue to grow through those cash flows. I'm going to turn to Gary to see if he has anything else to add on that.
Yeah, I would just reiterate comments on optionality, right? That's how we built the business. And I think that, we would love to look to return capital to shareholders, but most importantly, we've got to shore up the balance sheet, which again is extremely healthy, right? And as we increase our cash flows, it's just going to provide us more optionality as to whether we reinvest in the business because the ROI is greater there, or if that means that we need to return capital to shareholders through a stock buyback or some other means, and that's the best use of the capital. we've said that, it's probably been a while since we've talked about it on a call, but we absolutely would put that. But again, we can't do that unless we have, significant margins and a healthy balance sheet. And I'll tell you that that's why these fleet upgrades are so important, because the efficiency increased favorably by 20% between the 2 quarters, and our total cost or our cost to mine, direct cost to mine for Bitcoin dropped by $2,000 a Bitcoin, which only adds to our cash flow. So it's those types of investments that we think are not only going to pay off in the short term, but long term. And again, ultimately, once we have that fortified balance sheet and we've taken advantage of as many immediate opportunities as we can, we'll look to find other ways to return capital to shareholders. And our last point, we bought back almost 12 million shares as part of the convert. And, big reason for doing that was to really invest in ourselves, because, we have this clear path to 50 and even beyond. And we feel good about where we're going. So really betting ourselves at this point, we think that's going to translate to shareholder returns.
All right. Thanks, Gary, and thanks, Zach. Appreciate it.
Thank you.
Your next question comes from the line of Bill Papastasiou with KBW. Please go ahead.
Yeah, good evening, gentlemen, and congrats on the quarter. For my question, we're just hoping you could add some color on how you're weighing the growth strategy beyond 50 exahash. The quarter clearly demonstrated an attractive operating profile. And where you guys stand today at 40 exahash, you're not very far from being the leader in the space in terms of scale. So how important is it in the road ahead to scale, just given that all your peers are moving to AI HPC?
This is
Like
actually
it
a
could
really
be a
good
low-hanging
question.
fruit opportunity for investors that are looking for a high beta play on Bitcoin.
Yeah. Hey, appreciate you joining the call. Good question. We love when we hear someone's pivoting to HPC because it means global difficulty goes down. And so as we continue to scale in that environment, it just means the piece of the pie that we're getting of daily Bitcoin rewards, which again are scarcer every 4 years. So now is the best time to acquire it. It means our piece of the pie gets bigger. So yes, continuing to scale is important, but it's not an end all be all, right? Again, we don't grow to grow. We grow because it's strategic to do so, and it means that we have more to gain. Again, at the point we're at, every exahash we add is dropping Bitcoin or dollars to the bottom line. And so as long as that continues to prove, we will continue to grow responsibly in the ways we do.
Appreciate the color. Thank you.
Thank you.
Your final question comes from Greg Lewis with BTIG. Please go ahead.
Hey, thank you, and good afternoon, guys, for taking my question. And apologize if this has been asked. I've been having some issues this afternoon. Zach, you touched on it on the Capital Markets Day, really around your ability to create partnerships in the community. And just, as we think about, what's happened over the last couple of years in companies like CleanSpark really building, and helping communities across, Georgia and beyond, and the success that we've seen with other miners in Texas at ERCOT. Has there been any shift or maybe, maybe not that there's inquiries now for CleanSpark delivering Bitcoin mining solutions in some of these rural areas that you're looking to target, but as the tenor from potential, small utilities or customers or municipalities, how has that kind of shifted? And as you look out, over the next 12 months, I have to believe with the current administration that that's a huge tailwind as you look to kind of continue to expand your infrastructure footprint. Could you kind of talk a little to that? Thank you.
Yeah, we've shifted into an environment where instead of, people being worried about the big bad Bitcoin miner that's going to come to town, we get inbound inquiries where cities now understand the economic benefit that we can bring, whether that's through the tax base or whether it's through an employee base. There's different parts of the country that are frankly looking for different things in that. So, and what I will say, and specifically commenting on, small utilities, that's where also we're seeing a lot of benefit, because these small utilities, they've made 50 and 100-year long investments over the past, several decades. And when they have idle assets that are no longer producing revenue, they start to lack the ability to continue to upgrade their equipment. And so, we can be the answer to that. We can come in, we can use idle assets in communities where, the freeway didn't go through and everything went around. We can make a real impact in rural America. So I would say that, when our name goes into these communities, and I think I'm proud that it is our name going in, we're getting welcomed with open arms because these communities are ready to, reap the benefits of what Bitcoin mining really can bring to rural America. It's one of the things we're incredibly proud of. And partnering with utilities is a big part in the education. Having a large load can be scary to a utility, but their willingness to listen and understand the interruptibility of that so they can continue to serve all their citizens while driving down their costs and increasing their revenue is the key message we're driving forward. So I'm incredibly happy and optimistic about what I expect to see, really in the heartland of the U.S. as we continue to grow.
Great to hear. Thank you very much.
We have no further questions in our queue at this time. Barbara, I'll turn the call back over to you.
Thanks again to everybody for joining today's earnings call, and we'll look forward to staying in touch with you and sharing future results with you in the coming quarters. Stay tuned for more achievements from CleanSpark, America's Bitcoin miner.
Ladies and gentlemen, this concludes today's conference call. Thank you for your participation, and you may now disconnect.
Okay, that call didn't tell us anything we didn't already know, in my personal opinion. And that's that, in my opinion, I should keep prefacing this by it's my opinion, I think CleanSpark is tremendously undervalued at current prices. And right now, the markets are agreeing with that. After hours, CleanSpark stock's up by about 4.5%. Before I get into the summary, I want to shout out everybody that chose to join and listen to the call via my YouTube channel today. It means a lot to me. If you are new here or returning, not yet subscribed, please subscribe. I will be buying more CleanSpark stock. And if you want my buy and sell alerts, just Google RexFinance Patreon, click the first link and join. We just started a members portfolio where we deposit money every week and buy stocks, and I can about guarantee you next week my first buy is going to be more CleanSpark shares in that portfolio. The call was good. It was better than the last one. It didn't give us a whole lot of new information, but it did emphasize what CleanSpark does well and what they do better than their competitors, and why investing in CleanSpark is much more, in their opinion, is much more compelling than a lot of the alternatives out there for investors. Some key pieces of information, we already knew this, but their path to 50 exahash per second by the middle of this year is fully funded. They won't need to dilute anymore. They said that they closed their ATM program. They have no immediate plans to issue a new ATM, so that's dilution. So as of now, we have pretty good visibility on how much dilution is going to take place over the next 6, 7, 8 months, and that is 0%. And I thought it was interesting, kind of towards the end of the call, Gary, the CFO, mentioned that he would love to return capital to the shareholders, and over time, as cash flows improve and increase, that is something they'll consider doing via share buybacks, which I think would just be, that'd be amazing. That'd be a game changer for this industry. CleanSpark has always kind of been the thought leader in this industry, if you ask me, and a lot of the other companies kind of follow what they do. And I think that'd be a big change because, shareholders in this space have just been beat up by dilution for so long. CleanSpark has now changed that, at least in the short term. No dilution in the near future. And they talk about, just moving down my list of notes here, they mentioned that their cost of power per kilowatt hour increased to 4.9 cents from 4.4 cents. However, they mentioned that their margins are outpacing that incremental increase in their cost per kilowatt hour. They made it clear that they don't run their business based on their power costs. They run their business based on margins and profitability. You might be paying an additional half cent on your power per kilowatt hour, but your margin still could be much higher if the price of Bitcoin is much higher. And it makes sense in that environment to continue to mine Bitcoin. Another huge piece of information, and I've been saying this for a while. It's a total shift. They're the first company in this industry to say it. They expect their indirect expenses to be flat this fiscal year, which means that every single Bitcoin they mine and every single additional exahash per second they add to their total it adds to operational leverage. They bring more and more dollars down to the bottom line for shareholders. And that's a big thing. That means that stock-based compensation is going to be relatively flat. That means depreciation is going to be relatively flat. They took a huge impairment expense on their Bitcoin mining rigs last quarter. And I think now they've kind of figured out what the useful life of Bitcoin mining rigs is. So depreciation moving forward should be much more predictable. Professional fees have gone down as their M&A activity has slowed down, and they've been more focused on developing the pipeline that they already have rather than acquiring new infrastructure. A lot of good stuff there. I'm going to read through the 10Q when it's put out. It might be out now. I haven't even looked. I am curious how they get their marginal cost per Bitcoin number. They said that it was down 6% in the quarter, that their marginal cost per Bitcoin went down during the quarter, which is kind of hard to believe, to the low $30,000 range. Based on my numbers, I had their cash cost per Bitcoin around 50,000. So I'm interested to see where my numbers aren't lining up with theirs. But any decrease in cost per Bitcoin is a big deal, and it's a big deal for shareholders. There also was, they talked, you can see it, they had a gain on a Bitcoin collateral of like $40-something million. I'm curious what that is. My first guess would be they have to characterize the gain on their Bitcoin that's posted as collateral differently than they characterize the gain on the fair value of Bitcoin on their balance sheet that isn't being used as collateral. But I don't know of anywhere else they would use Bitcoin as collateral outside of that Coinbase line of credit that they have, but they paid back that line of credit, so I don't know if they'd have that collateral anymore. So I don't know. I'm going to have to get some color on that and some clarity on that. Chris said analyst upgrades are coming. I would agree. This is a great quarter for the company, and it really demonstrates the power of having a hodl balance. And that it really demonstrates the opportunity cost that miners that don't accumulate Bitcoin have. Mount Hood said, with destroyed and delayed altcoin market, Bitcoin miners are the natural and only alternative to have potential X return on your investment, a potential beta on your investment to Bitcoin, especially CleanSpark, but others undervalued as well. I would agree. I think Bitcoin miners, their day in the sun is coming again. They've been disappointing for a year now, but they'll be back. They're always back. They go through these cyclical time periods of being out of favor to all of a sudden being in favor completely. You know, it's just one of those things. Let's see, Stuart Hunt joined the membership. Shout out to Stuart there. And yeah, CleanSpark truly is best in class, in my personal opinion. With that, guys, I think that kind of summarizes this earnings call. My numbers were slightly off, not by much though. We were much more accurate than Wall Street analysts were with our numbers going into this call. I'll have a breakdown and an updated price target spreadsheet in the Discord server for those paid monthly members, and I'll have a new video on CleanSpark out very, very soon for everybody else that doesn't choose to be a member. If you want to join the membership, hit the join button. It's located right next to the subscribe button. You can just Google RexFinance Patreon. It'll pop right up, and you can join the Discord server. I post tons of content in there. And honestly, I have yet to have anybody complain about the value that they get. So I highly encourage you to do that. First and foremost, use your cash to buy stocks if you think if you think there's value out there. But if you have anything left over at the end of the day and you want to support me and get additional access to my brain, consider doing that. Thank you all so much for showing up. I think we topped at about 1,100 viewers, which is crazy to think about. Thank you so much. Have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.